everyone. Assalamu alaikum. I am Farooq Rahman, President of the Institute of Chartered Accountants of Pakistan. Transparent and true and fair financial reporting is the requirement of every country. Users of financial statements comprising of the existing investors, the potential investors, lenders, other creditors. Then there are other users of financial statements, which are government, employees, and public. All of them requires information that is relevant and material. So all of this is enabled by one organization, which is the International Accounting Standard Board under the umbrella of International Financial Reporting Foundation. So we are really honored to have here Mr. 𝐏𝐚𝐤𝐢𝐬𝐭𝐚𝐧, Chair of the International Accounting Standard Board. So what a privilege to have you here in Pakistan, and we ICAP hosting you here in Islamabad. 2 days of extensive technical discussions, a session with the chairman of the Securities Exchange Commission of Pakistan, and a visit to the finance minister. Just your views about here in Pakistan.
Well, thank you very much first for having me. It's a great pleasure to actually be in Pakistan and to be given that opportunity to engage with dignitaries, but also to actually speak to your particular audience and to members of the Institute. The impression that I have is Pakistan is generally a very sophisticated market and obviously well-versed in the universe of international accounting standards. I think when we chatted yesterday, you said that whilst you weren't the founder jurisdiction, you came very closely after that. I mean, our organization last year just celebrated 50 years of existence, and that is how long you go back with that as well. So I think you are sharing our key objectives and the key goals, and you see the key benefits of internationally aligned standards, and you place the significance on transparent, robust, and reliable and comparable information for the benefit of users. And that is really what came through also in our conversations with the chair of SEP and with the finance minister, who shared that agenda. So I have no reason to believe to the contrary that this is just lip service. I think it came really from the heart and said this is really at the center. This is what makes really the case for the profession. This is why we exist, basically, right? In order to help the market get to that transparent place and to ensure that actually everybody plays by the rules.
So, as you said, that the users of financial statements having the IFRS standards, it's a great benefit for them. We here in Pakistan, we have a jurisdiction where we have adopted the IFRS, except for certain legal and local variations. But looking at the future, how do you envision the role of the IASB in respect of the development of, again, standards which are, I would say, the future-ready standards?
Yeah. So I would say we are obviously in the heart. So if we just look back 25 years, we didn't exist. There was a precursor standard. That was a voluntary standard. Since then, almost 150 jurisdictions around the globe have actually picked up on IFRSs. In the beginning, there was a question as to would the market trend towards US GAAP, so the US standard, or whether it would trend towards the IFRS. I think that question is no longer asked with 150. I mean, the answer is clear. So any development is probably coming through us, but it's not coming from an ivory tower. What we take quite serious is actually the engagement with all the stakeholders around the globe. Every 5 years, our constitution mandates us to conduct what we call an agenda consultation, which is a structured survey, if you want, with all stakeholders. Everybody is invited. Everybody is able to give their views on what we should be concentrating on. Firstly, whether we should maintain the split of our work, because even though we are a standard setter, we do not only set standards. So the fact that we are talking here, I'm not setting standards at the moment, but we are doing stakeholder engagement and outreach, and that is a very important part of our mission. So we spend about 25% of our time in actually going out and talking to people in jurisdictions, trying to understand what's working, what's not working, getting an understanding of, say, if Pakistan made changes in certain areas of the standards, get an understanding why that is the case, what's the rationale, is there potential to actually probably just having a temporary change and come back onto the state. So that's really important. We spend a further 20% in actually trying to help jurisdictions and companies in particular implementing and maintaining the standards. So if we are becoming aware that there is a question because there had been a change in an economic environment or in the economic practice, new trends have emerged like AI or cloud computing, people ask natural questions as to how does that actually feature in the existing standards, and the answer is probably not, because the standards were developed some time ago. So the question is, do we need to amend the standards in order to keep them up to date? So that's really what we are looking into. But we are working for the benefit of global investors in financial markets, and we want to work closely with our stakeholders and said, tell us where you think there is a gap and where we need to act. We will then assess whether we can actually bring about an alignment in a reasonable period of time, because nobody is helped if we said, yeah, we probably can do it, but it would take 20 years, right? So we need to be convinced that if there is a way for improvement, that we can actually bring the improvement in a more expedited pace to the market.
I heard you saying yesterday that the International Financial Reporting Standard have actually a role to have investments and a foreign direct investment coming into the country.
Yes.
So if you can just elaborate on that.
It's a very good point, actually, and this is something that I probably only became aware of in the last 2 or 3 years, because the original mission for the IASB was quite different. It was really to equip companies, large multinational companies, to use one set of financial statements around the globe if they wanted to raise capital. So if you do have a Pakistani big company that's internationally oriented, if they have IFRS financial statements, they should be able to raise capital anywhere around the globe. And that was the original mission. 25 years on, the situation has changed quite dramatically. There are certainly still companies that are raising capital internationally, but the more likely course is now that global investors are actually coming into your country, because they want to broaden their investment universe. If you think about the US, if you think about the UK, even if you think about Japan, they're probably saturated markets, right? So then the capital has been deployed to where it can earn a meaningful yield, but investors are then looking as to where else can we spend our money. And I think it all starts with analysis of the financial situation of the company. And arguably, if companies are using a well-understood system that is almost universally applied, then this is a great advantage because it fosters the efficiency of the investment process. Taken to the opposite, the more that jurisdictions deviate from the international consensus, the harder they make it for global investors to really understand why is there a difference, how big is that difference, who is using that difference, and that means they have to invest more time in understanding the differences. And then there's basically just 2 ways how they deal with that. Either they are willing to invest that additional time, but that would usually mean they increase the cost of their analysis, and that will be a detriment to the investor. Or they simply say it's not worth it, let's just bypass the country and move on to the next market. And this is, I think, why it is so important to make that connect, that a global financial reporting language is really a precursor. It's almost a prerequisite to attract international foreign investment, because only if people understand the business language that's being used in a country, they could get faith, they trust the numbers, and then they are willing to actually make meaningful contributions.
Completely agree. This is a statement in the financial statement that the accounts are as per the IFRS. It immediately gives credibility.
Yes.
So not only locally, but internationally, and specifically for the investors. So Pakistan is a developing country. There are other emerging markets here as well. So you have been going around and talking to such markets. So how is the response from, because maybe in a developed market, there's a different understanding and capacity, but looking at the developing and emerging markets, what's your...
Well, there certainly are challenges, and to deny that would not do it any justice. But if it makes you feel any better, if we look into even the developed markets, I think some of the problems we hear from small and medium-sized companies alike. So there is not that much of a difference. Because, as I said, the outset was really look into serving large multinational companies. Arguably, these companies do have the resources, right? They can cope with whatever we come about with. They give us feedback as to if they think we go overboard or we are asking the impossible. But the tragedy almost is that the vast majority of companies that are applying IFRS are actually in the small and medium-sized sector, and they hardly ever make themselves heard. Whilst we can be disappointed about not hearing from them, I think it's absolutely understandable. If you do have a company that has, say, 200 employees, you may be lucky to find 2 or 3 people in the finance department, and then they cope with taxes, they cope with taxes, they cope with controlling, they cope with accounting, they cope with all sorts of things. They don't have time to read. They don't have time to actually think about the future of reporting and responding to an IASB consultation. So I think we have to find clever ways to actually solicit feedback in these markets, and maybe we are doing that actually, to coming back to your point, in developing jurisdictions, because we are aware that actually what only pertains to small and medium-sized companies back in the developed world, for emerging economies and for developing jurisdictions may be actually a far bigger problem. And we become aware of that by going to these countries and speaking to all stakeholders, speaking to companies, speaking to investors, speaking to journalists, speaking to people in government. We become aware of the challenges. Now, the problem that we have as a global standard setter is we can't cater for 150 different variances, because to our previous conversation, IFRS is like a trademark. You either comply with it or you don't, right? You can't partially comply. That doesn't really work. So what jurisdictions do have discretion over is obviously whom should the standards apply to and when should the standards come into force. And what we have sometimes advised against our belief, but in the best interest of some of the jurisdictions, is actually think about when to start actually with that standard. Whether you want to give 2 extra years to actually give your sector time to really dig into it, to get further time for advisory or consultancy, to come to a level of understanding and proficiency that enables you to do a robust implementation. Obviously, we don't like that if standards are being pushed out, but sometimes it's just a necessity because the necessary proficiency is not there. And we talked about insurance accounting, which is obviously the prime example for that. But other than that, I think, as I said, the differences are probably not that big between small companies around the globe. A small company is a small company, and they all tell me the same thing. There is a regulatory burden, it's just too much, we need a simplified system, and can you help us here? We try our utmost, but this maybe, Farouk, is a good time to also point at a second system that we entertain. So we do have IFRS accounting standards, which is what we call the big book. But there is also a version that applies to small and medium-sized entities that don't have public accountability. So in general terms, that are not listed on the stock exchange and are not performing public services. And that is a much simpler book. It's about only 230 pages long. But it is absolutely self-contained. It is not changed every year. It is changed in 5-year intervals to take into account major advances that we have made in financial reporting. And we have massively positive feedback on that particular standard. Sometimes people treat it very derogatively and say, it's just a smaller brother, right? But it's actually also, it's a high-quality product. And to just demonstrate the significance of that standard by giving you one data point. There are more companies using the IFRS for SMEs in a country like Cambodia than there are companies using full IFRSs. That tells us something, right? And there are more than 60 jurisdictions around the globe that are using the IFRS for SMEs. So, I mean, that is another international standard that is understood, that is probably less of interest to global investors because it applies to companies that don't have public accountability. So if you're listed, then obviously full IFRS is still the platinum standard. But that is something that I would probably urge jurisdictions in looking into as well.
So, Pakistan is one jurisdiction where we have the differential reporting concept. So we have for SMEs, IFRS performance. I understand this is being updated.
It is. We are currently in the final slopes, really, of the update. Obviously, a lot has happened in the last 5 years. In big IFRS accounting standards, we have a new revenue standard, we have a new leasing standard, we have a new financial instrument standard. So there is a natural question: should we actually update our literature on the SME standard? And the feedback actually was quite mixed. On the revenue standard, by and large, stakeholders said the new model is a better model because it caters for more often seen newer transactions. And it gives us a very good, robust framework with that 5-step notice as to how you assess when to recognize revenue. Contrary to the leasing side, we have decided not to use and bring the new leasing model into the SME standard. It's not that we are not convinced that this is a good model, but we thought we are just about to enter into a post-implementation review, and we are already aware that there are concerns with the existing model. So we don't want SMEs to actually have the need to change twice. So we first want to really assess whether there is a need to change the underlying literature before we contemplate bringing that into the SME standard. And on financial instruments, the board had long debates about whether the expected credit loss model, which was the key part, obviously, of the new IFRS 9 standard, should be brought into the SME standard. And a vast majority of our board actually said, no, don't do that. I mean, these are not really complex entities. There may be just a few. There may be 1,000 at most around the globe that do have more complex transactions, but to overburden everyone with that model, that doesn't make sense. We have one board member who said I might likely dissent over that because I think this is really just so important that it should have been brought. So we aim to publish that standard in early next year, so it will be available for use.
So, Andres, you have been here and you're also attending the AOSFP,
Right.
Asia Standard Chartered Group, which comprises of 58 members, and now one more member has been added,
Right.
PG. So how do you see that interaction with this such 28, 29 countries, a perspective? And I understand it's a very technical kind of discussion that happens there. So how would your experience with that?
So we like to actually engage with these regional groupings. It makes our life so much easier, as you would appreciate. I mean, we are probably larger than the Pakistani standard setup, but we are still a small, medium-sized organization. So we need to also find ways how we could communicate with our stakeholders. And having these regional groups as a collector of views, and as a focal point, obviously helps us to actually concentrate our resources and be very, very efficient. We very much value the views that we are receiving from AOSSG. AOSSG is a standing member on our Accounting Standards Advisory Forum. We meet 4 times a year, so on a quarterly basis, with a select group of national standard setters and these regional organizations and we are receiving input on our ongoing development of the standards. So this is a timely way to actually give us your view and influence our work. And we are hearing very valuable views coming from all groups, including AOSSG. I would say that AOSSG in that sense is probably not different to any of the other groupings, maybe with the exception of IFRAC, the European group, and that is probably because Europe has a more united, more homogeneous background culturally, legally, and therefore probably their views are more aligned. As you would appreciate, a region that covers the vast majority of our globe and really many different jurisdictions, some more advanced, some still in catch-up mode, some big, some small, some with particular issues. If you think about Islamic finance, for instance, that doesn't pertain to all Asian countries. So there are different views. Bringing that all together, I think, is what makes really international community a good place to be. And so I really very much value the exchanges.
And Pakistan is in this term sharing this.
Absolutely.
We are getting an experience, a different experience.
Yeah, absolutely. So AOSSG does have a rotating membership. So there is a vice chair and a chair, and the mandate of each is 2 years, and the vice chair will become the next chair. So there is actually a 4-year period, giving a huge incentive, I think, to jurisdictions that are willing to share their expertise and help them. And Pakistan has done a tremendously good job in actually bringing everybody together. Actually, it was under your tenure that new members have been admitted, and I know that the current chair is actually quite eager to bring even more members onto IOSSG. The more the merrier, I would say. It enriches the discussion, and it is really also helping foster the dialogue in between Asia. I give you one example. We have been approached by one of your AOSSG jurisdictions with this Vietnam. Vietnam has a path towards IFRSs, and they have informed us that there will be about 7,000 companies that will be going over to IFRSs. They have asked us for help, but it goes without saying, we are a small organization. We can't realistically be helping 7,000 organizations. It's impossible. So, but one of the beauties of AOSSG is actually sharing learnings and sharing experience, and probably also fostering bilateral ties between jurisdictions. So we are aware that Australia, the current vice chair of AOSSG, has actually made a commitment. We will help Vietnam and share our experiences, because we have transitioned to IFRS some 20 years ago. So we have some learnings. We can tell you some do's and don'ts. You can avoid some mistakes that we have made, and we will help you and actually master that. And that is, I think, the beauty of such regional organizations, right? Bringing together those that have shared learnings, that have similar cultural backgrounds.
That's such an important point.
Yeah.
Now, looking towards the future, what are the key priorities, let's say, in the next 5 years? What do we see coming out of it?
Well, so firstly, I should probably say that for the last 7 years, actually this year, we have published 2 new standards, which we are quite proud of, obviously, because a lot of time has gone into the development. IFRS 18, giving more rigor to the income statement and to associated notes, and IFRS 19, which is a reduced disclosure regime that should address the cost burden of groups that have many subsidiaries that themselves want to apply IFRSs but do not really see the merit in giving so much disclosure. And we have catered for that. On our radar screen at the moment, we have just added 2 new projects. So one big project is intangible assets. We do have a standard that is some 25 years old. If you go back in time 25 years and contrast that economic environment with where we are now, words like cryptocurrencies and cloud computing didn't exist 25 years ago, but now they are on everybody's mind. So arguably, companies like Microsoft, like Google, like Apple were only in their infancy when the standard came out. So look where they are at the moment. But if you open their books, all you see is a huge pile of cash, but you don't really see what they are renowned for, right? You may actually, by looking into their books, assume that they are a bank, but actually no, they're an intellectual property company. And where do I find information about that? Hardly any in the financial statement. So it's high time that we actually look into the standard, and there was a broad consensus by stakeholders. We also are looking into refining our statement of cash flows, because users have told us that whilst they appreciate the information that's being portrayed with the statement of cash flows, there are several arrangements that don't involve the transfer of cash, but by their very nature is almost similar to a cash-based transaction. It is as if you do have two cash flows that are reciprocal in each direction. So you have an outflow and an inflow. The overall cash balance doesn't change, but the underlying economics have changed. So they said, where do we see that? How can we depict that? So that is one of the issues that is coming to the fore. Other than that, we are really looking into progressing on our technical project. So next year, what you will be seeing, we already mentioned the IFRS for SMEs that will be on the doorstep. We also have a practice statement on narrative reporting, which we call management commentary. The old statement is completely outdated. There has been a lot of advances. If you just think about a topic that we just discussed at AOSSG being sustainability reporting, many jurisdictions have actually said narrative reporting and a management commentary is the right location point for holding such disclosures on sustainability. So we have dramatically upgraded our guidance. We have had a consultation that received profoundly positive feedback, some requests to actually clarify a few things, which we are now doing. We have set ourselves the goal of only 3 sessions. 2 have already passed, so we have 1 session to go in December. And then we will conclude our technical deliberations, and we hope to be publishing the revised practice statement in the first half of next year. And then the last statement that we are looking forward to producing next year in the second half is our first standard on rate-regulated entities. So that is obviously of interest to utility companies.
IFRS 14.
Exactly. So IFRS 14 is the old standard that basically grandfathers largely domestic treatment. So this will be our first homegrown standard. We have also heard quite positive feedback on where we are in this project. It is a complicated standard, I should forewarn you. So, but I think it addresses really the concerns that do exist in rate-regulated entities. And what we will be facing thereafter largely depends really on the feedback that we get when we launch our next agenda consultation, probably also sometime.
I'm already getting some feedback on IFRS 14.
Yes,
that's going to be interesting.
Yes.
So all these big projects, what challenges did you see in terms of like bringing these high quality standards?
Yeah, so obviously I said we could be quite proud that we do have 150 jurisdictions that have adopted our standards. That is the success side of it, but the success means also a challenge, because with every new member there come new wishes and new demands and new views, and reconciling these different views obviously isn't easy. Intangibles is actually a good example. So every year in September, we convene all national standard setters that we team up with around the globe in London to have an exchange on technical issues. And this year, we launched some online questionnaires and said, what do you think we should be concentrating on when it comes to intangibles? And we gave them a list and we said, tick them who you think, if you're thinking these issues are important. So we got a list. And then we asked the second question, which items in this list the IASB shouldn't be looking into? And believe it or not, the very same issues appeared on top of both lists. So one group of people were saying, we have to bring more intangibles onto the balance sheet. And the other group was saying, don't bring more intangibles onto the balance sheet. Some people were saying, well, cost is absolutely meaningless because the cost that goes into producing intellectual property is negligible. It should really be a current measure. And others said, don't go to current measure, it's all too subjective. So we get highly conflicting views, and seeking to find a compromise position that works, at least for the majority of the jurisdictions, obviously will be key. What we are always doing when we start a big project is we are doing research. We need to understand what is the problem, or probably with intangibles there are multiple problems. So get us a better understanding of what is the problem, and then getting an understanding of, is that problem really a problem for us, or is it probably a problem for others? If we turn to intangibles again, several people have said intangibles are really difficult to measure, right? Many intangibles are one-offs, they are not fungible. So we are looking into something that is unique. How can I measure something that is unique? We said that's a very good question, but that's something that you probably want to ask another organization that is also domiciled in London, which is the IVSC, the International Valuation Standards Committee. They are looking into valuation questions. We are only the humble accountants, right? We take whatever we get and we say, this is the way how you present it. So distinguishing what the problem is and whether the problem is for us. And then the third thing that we try to establish is, can we find a solution within a meaningful period of time that is cost beneficial? So for all of our requirements, we have to be convinced that when we are making advancements to financial reporting, we are not overburdening the entire system. So there should be benefits, clearly, to users, hopefully also to prepare us, that they also get a better understanding of what's happening in their companies. But if that benefit can only be brought to life with unreasonable cost, we would say that doesn't work. So it has to be cost beneficial. And only if we pass this test, if we understand what the problem is, if we think the problem is for us to solve, and we think we can bring a meaningful and cost beneficial solution, then we actually progress. In intangibles, I could very much foresee that we will break this humongous project into different phases in order not for companies to wait for 20 years before they see the first light in the tunnel, but actually to bring some improvement to reporting on a much quicker base. Now, I have to caveat that because if you are staging projects in different phases, there's always a risk that a later phase might reverse something that you've decided before. And obviously, nobody likes that, right? Preparers certainly don't like that because they incur multiple costs. Investors don't like that because it breaks their time series information. I may say the only ones that are quite happy are the auditors, because they audit what is there, and they will have to perform their job. But clearly, I mean, we are all in an ecosystem and have to work together. So we have to be very diligent that if we are settling on something in an early phase, that has really the potential of staying on.
Yeah, that's important. So just before I go towards the conclusion side, one very specific Pakistan-related question. Our financial sector, both the banking industry, the insurance industry, now are transitioning to IFRS 9 for the ECL part for banking, and insurance IFRS 17, of course, that impacts the insurance industry.
Right.
Any word of advice? Anything to do this? Just based on your experience around.
Yeah. So I would probably give two pieces of advice. One goes back to our point that we touched on before, as to how do we cater for different stages of development and different stages of proficiency. And I think that is particularly relevant in the insurance sector, where in many jurisdictions there isn't an awful lot of actuarial knowledge. IFRS 17 is a very difficult standard. I don't deny that at all. because the business of an insurance company is difficult to understand. It requires the technique of an actuary to actually assess these long-range risks that work with certain mathematical models that are not easy to understand at all. If you want to mimic that and bring that to a faithful representation, obviously that requires time and that requires that extra knowledge. What we have advised some jurisdictions is actually don't let everybody go at once. Think about a staggered approach. The most sophisticated in a country would probably be able to move by the effective date that was set by us or would be set by the regulator. But the smaller companies do need more time for implementation. And if you do have a staggered approach, you actually allow the second and the third tier to leverage learnings and experiences that actually the biggies have already had. So that knowledge is actually passed on in the system, and that should actually facilitate a smoother transition. So that is one thing that I would say. Not to make that a general comment that I like the staggering of effective dates, but I can understand why they have to exist, and I think that to me makes perfect sense. In terms of the banking sector, and probably also to the insurance sector, if you then apply the requirements, please do not think about any carve-outs. Because I think the financial sector is probably the one sector that is most closely connected on a global world. Everybody knows where people are. So don't try to hide anything, right? Transparency is key to the financial system. It's key to trust of society into the entire economy and into the grander scheme. If your situation isn't rosy, don't make it shine rosy, right? Don't sweep issues under the carpet. Be forthright. Be actually transparent about what's there, because only if you address a problem, you can actually also seek meaningful ways of finding countermeasures. And that would be clearly my advice. I've lived through a system in Europe where I've seen transitions happening where some have actually tried their utmost to actually utilize tricks and going around it. It always fired back at them. You probably buy yourselves a couple of years' time, but in the end, I mean, it will come to the fore. So,
certainly.
Yeah.
So, just as a concluding remark, any word of advice to wider accountants?
So wider accountants, keep loyal to our system. I mean, the accounting profession is a great profession. You expect to hear that from me, wouldn't you? But I truly believe in it. I mean, we are the backbone, really, of the economy, and I think we play a very significant role. We are helping businesses in giving justice, laying transparency, showing how they actually contribute to society. And we are the safeguards also in applying the first line of defense after companies have prepared the account and ensuring that actually the information that's being produced can be trusted by all participants in the ecosystem. That is not a mean feat. This is a massive and humongous task, and I think that is really where the profession comes to the fore and is really absolutely valuable.
Absolutely. Completely agree with you, Andres. Again, a big thank you to you here in Pakistan and giving us time for this very session.
Thank you for having me.
Thank you, viewers, for listening to this conversation. I'm sure you will remember it for long. Thank you.